because then Mr. Okay, thank you. Do you want to start? No, there's still 2 minutes, right? We'll start at 4:30.
फुल ब्लोन सर्कुलर इकोनॉमी इसमें से हम अभी के लिए सर्विस नहीं कर रहे हैं. दिस इज आर्च.
The reformer session, and then I'll talk about Depop, 1.6 billion.
It is 4:30 right now. Do you want to start or wait?
We'll start.
Rajshri? Alright. I'll start with the timer. Okay, play the video and then start with the script. Okay, and I'll hand over the call to you, Mr. Amanpreet. Thank you.
Well, we'll have to wait for 30 seconds, right?
Yes.
आप अपना वीडियो ठीक कर लो. गौरव ठीक से नहीं दिख रहे और थोड़ा नीचे देखना. Okay.
Yes, this is fine.
All the best.
Thank you, sir. To you too. Let's work as a team.
रोहित, तुम शाम को मिल रहे हो ना?
So we'll be live now. I request you to remain silent.
In a world drowning in waste, envision an oasis where excess becomes efficiency. A place where businesses no longer grapple with surplus but transform it into opportunity. Where consumers don't just buy, but buy better. Enter the future with Rocking Deals Circular Economy Limited.
This is the only business that we feel that can be replicated anywhere in the world. Any country, any brand, any company would have excess stock. They would have customer returns. They would have unboxed, which might be a box damaged product. And we do not see any business as good and as scalable as this. Because anything and everything is an asset for us to be resold to somebody who requires that.
Rocking Deals Circular Economy Limited is at the forefront of redefining excess inventory management. Serving both businesses and consumers, they pave the way to not just sustainability, but smart, conscientious living. They stand firm in their commitment to the circular economy, ensuring that products enjoy extended lifespans and reduce the burden of the planet. Choosing Rocking Deals Circular Economy Limited is as choosing efficiency. For businesses, it's about smart economics, saving on storage, transportation, and disposal. For consumers, it's about smart choices, getting quality products at lower prices. But beyond the economics, it's about smart living, conscious consumption, and making choices that champion the planet. Rocking Deals Circular Economy Limited stands on the cusp of an exhilarating expansion. Our mission is clear and our path illuminated.
We started this journey in 2015 when circular economy refurbished was totally a taboo in the country. As of right now, we do all the different categories. Our dependability in 2015 on mobile phones was about 100%. Now our dependability on mobile phones is less than 1%. The reason we've been moving and we've been trying different categories and we've been doing this business is why we've been successful. I see circular economy being one of the biggest businesses in the coming time, which is going to be more than $1 trillion. Why I say that is because we're actually bridging the gap between customers who don't need something to customers who need that particular item or a product. We're selling millions and millions of units till date.
अभी हम लोग लगभग 70 ऑर्डर्स मंथली लेकर के आते हैं, जिनका एवरेज ऑर्डर साइज 2.5 लाख होता है। हमारी टीम जो टोटल लीड्स जनरेट करती है उसका 7% लीड्स हम लोग क्लोज कर पाते हैं, जो कि मार्केट के स्टैंडर्ड से 4 गुना बेहतर है।
So welcome to the universe of excess inventory, circular economy, e-commerce. Let's go green.
We are calling on visionaries, trailblazers, and those who see a future where consumption is both mindful and meaningful. Together, let's not just envision, but create a world that thrives in a cycle of renewal.
Good afternoon, ladies and gentlemen, and welcome to the SME IPO conference call of Rocking Deals Circular Economy Limited. We have with us today Mr. Aman Preet, founder and CEO, and Mr. Gaurav Gupta, CFO. Corporate Capital Ventures Private Limited are the lead managers to the issue, and we have with us Mr. Kulbhushan Parashar, Director at Corporate Capital Ventures Private Limited, also on the call today. At this moment, all participants are in the listen-only mode. Later, we will conduct a question and answer session. At that time, you may click on the Q&A tab to ask a live question. Please note that this conference is being recorded. Part of the Faridabad headquartered Rocking Deals Group, India's largest and fastest growing integrated B2B e-commerce player, Rocking Deals Circular Economy Limited, that is RDCEL, formerly known as Technics Electronics Limited, is India's dedicated B2B sourcing platform for unboxed, certified refurbished, excess inventory products across the consumer retail space. Founded and led by Mr. Aman Preet, the group pioneered the concept of seconds in India. Presently, RDCEL certifies and sells products across 18 plus categories. Besides, the company also procures unboxed and excess inventory from various well-known brands such as Bajaj Electronics, Puma, Whirlpool, Marshall, Dyson, Boat, JBL, and many more. RDCEL has sold over 10 plus million units through a reputed network of B2B clientele, including its group company Rocking Deals, Jindal Megamart, Flipkart, Brandwala, VLE Bazaar, and hundreds of more vendors. RDCEL directly sources products across multiple product categories from brands and also has exclusive tie-ups and partnerships, so products are 100% certified authentic. The products are then assessed for quality, functionality, repairs, warranty, etc., and appropriately priced for final sale. The company business operations are environment friendly helping companies reduce their carbon footprint by decelerating e-waste. Over the years, RDCEL has created a warehousing space of 30,000 square feet in Faridabad, an RDL4 service center with an installed capacity to grade around 1 million units each month, and has exclusive supply to serve around 70,000 square feet retail space through RT and its franchise network. The company is now well poised to amplify its own brand and strengthen its marketing and advertising initiatives, riding on the upcoming IPO. The company is offering 15 lakh equity shares with a face value of rupees 10 through the book building route. The issue would list on NSE Emerge, and to discuss more on it, I would now like to request Mr. Amanpreet, founder and CEO, to share the opening remarks, welcome the attendees, and share his journey with RDCEL. Thank you, and over to you, sir.
Thank you so much. Thank you, everyone. RDCEL is a circular economy brand in India. Circular economy, and especially in the time right now, is all about sustainability. India is now a $4 trillion country, and circular economy globally is $2.5 trillion as of right now. Now, if we talk about circular economy is enhancement of life of a product so that there is minimal wastage of the same. We see this as the next most in-demand category globally. Globally, there are companies which are billions of dollars of worth just doing e-commerce. Circular economy controls and has many more different categories and many more different sub categories under them, which we will discuss in the presentation that I'm going to read out to you. Let's start with the presentation, please. Disclaimer.
Please to next slide, please.
Okay, so an idea whose time has already come. This is an estimated $6 to $8 billion opportunity in India. The age of sustainability is on us. Circular economy focused B2B procurement company is what Rocking Deals is. We have demonstrated experience in creating markets with excess inventory and open box products. We have been the ones who started this category in India. The experienced promoters with demonstrated legacy. The company was established in 2002, started operations in 2005, headquartered in Faridabad, Delhi. First-gen entrepreneur, which is me. I started this from scratch. Pioneers in excess inventory and certified refurbished. We have a lot of experience over the years as to what to do and what not to do. Long-standing partnerships with marquee brands and corporates. We launched certified refurbished products category for companies like ShopClues, Amazon, Too Good, Flipkart, and many more. Firm sourcing agreements with reputed brands across appliances, apparel, and e-com segments is what we have. We cater to large, unorganized, thriving retail sector. India is Bharat is an aspirational country with people who want branded products at affordable prices. This is what we are bringing to them. We offer authentic products where you see a lot of companies, a lot of people trying to sell unauthentic copy products, which we feel when you can source the authentic branded products from the brand, it's better for the customers to go directly to them and supply to them. We serve the first quarter experience of adopters riding the brand wagon, evolving to the next level, a well-defined ecosystem built from sourcing to retailing, established credentials and smartphone in 2.0 version, IPO to fund the 3.0 version of growth with scaling of procurement, firming, exclusive tie-ups and brands. So we see a lot of tie-ups that's going to happen after we already have, and we have more demand and we have more supplies that we just need to cater. We just need to have a bridge there. And we see that this is going to do very well for us. The story that we have over the years, we peaked about 103 crore turnover in 2015-16, where we were doing mobile phones alone. Now, over the years, we've understood what categories to do. We have established credentials for QI FY24 of 10 crores already, and we see a lot of growth this year. Next slide, please. So if we navigate this presentation, it's all about we operate in a sunrise industry. India is rising, future is circular, understanding the landscape, the process, and value proposition. We continue to strengthen our USPs, capacities, and highest relevant manpower, technology and processes, certification and brand tie-ups, and markets. So this is what we've been earning and doing for over the years and the experience that we've built up. We have embarked on a road less taken. There have been many brands who've thought about it, but we are the ones who've actually taken this category, and we feel and we know that this is going to do very well, and globally it's doing very, very well. We are expanding in different horizons, the whole unveiling of ecosystem play, expansion agenda, listing objectives to the issue, and key takeaways. Next slide, please. So we've always loved to think out of the box. I started my career with a retail for a Tata Tele Services branded store, but gradually I understood that distribution and retail in India is all there's nothing out of the box in that. So when we got into this category gradually, slowly, we understood. We did a deal where Let's Buy as a company was being bought over by Flipkart, and we had the rights for Flipkart at that time for all their returns. So when we got that, we understood that just mobile phones or electronics don't sell. Every category in India sells. We were shocked to see that from furniture to undergarments to clothes to shoes, everything sells if the product is branded and at the right price. And that was a journey where we started, and we thought that this is the category and this is the product and this is the thing that we need to do in the future. Next slide, please. India, Bharat is what we all know about. There's a 25% rise in per capita income over the past 2 years and 50% over the last 7 years. As income rises, the share of discretionary spends also rise. You can see in the slide that the spends are also rising. People have more money to spend. The third one is reflecting the rising consumption numbers. This is the consumer internet GMV. The GMVs are going up in billions. It's rising. It's from 32, it's gone to $170 billion. And we see a lot of more demand and more product being sold, more e-commerce, more customers understanding the brands, more penetration in the market. And we see a lot of customers buying and going to the middle class. The category is growing. People have more aspirational demand for branded products. They want to use more branded, more exclusive brands at the best price. Maybe they don't have the funds. Maybe they want to buy at a cheaper price to try those products and then move on to the latest models or whatever the latest available products. Next slide, please. If you see, the customer demand is visible. AC and coolers only 24% of the India. If you talk about the percentage of households who own AC is only about 24%. If you go to refrigerators, it's something close to 38 odd percent. At the same way, if you talk about cars, it's just something somewhere close to about 8%. So people are buying more products that are, aspirational, that are required, that is something which comes out of your regular livelihood, and people are buying that, and they're very happy in terms of, the raise and the rise, and the future is great. This is what we see. If we talk about e-commerce penetration in India, the mid-income is only 5 to 10%. This is what we are very happy, or we see that is the traction is there. Those people want to feel the product, see the product. They want to buy those aspirational brands. They would like to see them. They want the best deals, and they want to make sure that they are happy to take that. So we see a lot of traction there, and we feel that a lot of people across the country are accepting our brand because of this. Growing income, increased online spending, growth of rural consumption. We see a lot of rural consumption, young millennial households. India is the future. Next slide, please. A gateway to circular economy. Worldwide, the estimated revenue generated from circular economy transactions has totaled $388 billion into 2022. But overall market is about $2.45 trillion, as I said. The clothing industry global emissions are predicted to grow by 50% by 2030. Every year, fast fashion industry produces 92 million tons of textile waste, which is 3% of global CO2 emissions and 20% of the global waste pollution. This is just the apparel, this is just the clothes we're talking about. So, like I always say, one pair of jeans is 7,000 liters of water. So the more we use, the more we reuse, the more e-commerce, the better it is. There are companies globally which are valued about $7 billion, like Poshmark, Depop, which is bought for $1.6 billion right now. They're only into e-commerce, they're only into fashion, and this is the valuation they have. All they're doing is they're doing trading programs with brands, getting their products in, grading them, and selling them back as pre-owned. And they're valued up to about $7 billion post the IPO. So we see this market being very big. All the brands globally, any and every big brand internationally is working on circular economy. They want their customers to be retained. They want to have they're looking at sustainability. They're looking to reduce the waste. They reduce the pollution. All of that is on the agenda, and all the governments and the brands globally are working towards it. And this is the right time for India to get into it. And we are the only brand who've been doing this and who are here to stay. Next slide, please. So what does circular economy have? Circular economy has e-waste or waste processing. The whole life cycle of a product when it's over, when it's finished, the whole recycling and finishing of those products and the output that comes out, that's reused again for new spares. We see a lot of shoes nowadays, they say it's made of the waste from the seas, it's made of the old apparel. So all the whole process after e-waste and e-waste consumption, adding life to that is something which is a very, very big market in the industry. Re-commerce is anything that's been previously owned, is bought again by marketplaces or buyer who wants to resell, reuse, or recycle. Refurbished, there are products, there are brands who do refurbishment of their products, like brands like Samsung, where they do their refurbished mobile phones, even Apple and many other grades, HP, which do refurbishment of their products, the products which are returned, they refurbish it and make sure that it goes to somebody who requires it at a better prices. Excess inventory, this is the biggest of them all. Any manufacturer, any brand would have excess stock. at any given time. So that also is a part of circular economy. Open box is anything and everything which is being returned or to the e-com or the retail chains, product which has been opened but the box is a little damaged or something is wrong with it, the seal isn't there, all that comes under open box. That's also a category which is sold. Demo units, export surplus, all that also includes in circular economy. As of right now, next slide please. Re-commerce and excess inventory is our playground right now, but all the other categories are also something we will get into in the coming time. Re-commerce and excess inventory together is somewhere close to about $60 billion in India. And like I said, only re-commerce companies like Poshmark, they are about $7 billion worth right now. India is the future. There are a lot of D2C brands in India. There are a lot of products which are demanded. People have they want perceived products which are the values are high. They would like to try them. They would like to the whole achievement of getting branded products at the right price is something that we are looking at and we are supplying and giving to our customers. Excess inventory is what I've already discussed with you. This is the playground we have, but the future is everything else that we spoke about in the future. Next slide, please. What is our value? What are we doing in this business? So, I mean, what is our value add? Our value add is sourcing the right products from the right brands, directly from the brands, exclusive tie-ups and partnership with these brands. Everything that's sold or sourced is with an invoice, with the bill. Authentic products are only traded in or they are bought in. Now, after buying all of that, anybody can do that. Our expertise is to grade that product, right? So when the product comes in, we have to grade it all. Quality assessment is made. The details are done. Functionality testing is done. Repairs if required is done. And the warranty is added to it. So after grading ABC, the value of the product is derived as to what price we're going to sell it at. This is where the money is. This is where the profitability is. Then we do all the pricing as is basis. Quality certified basis. We do the pricing, leaving value on the table, and using our own ecosystem to expand the margin. So if something is an A grade, which is a brand, looks like brand new, we will sell it at 30-40% off on the online or the MRP. If there's something which has a little dent or on the box, or the box is a little worn out, it's going to go up to about 50 to 60% off on the MRP. And anything which is without a box or has a scratch or a dent on the product, it will go up to 70% off on the MRP. So the whole value is the pricing and grading of the product. And if we are able to grade or if we are able to make a B grade product, an A grade product by our expertise, we get more output, we get more profitability. Next slide, please. So how is it a win-win proposition for everyone? It's a win-win proposition for everyone. Brand, they're able to dilute their inventory. They are saving their costs. They are saving their reverse logistics costs. They're building their brand loyalty. How they're building their brand loyalty? Let's say Levi's is an activity where they say, I'm just taking a brand name just in the air. They're doing an activity which they're doing in Europe. They say that you bring in your old device and old jeans, and we will give you a discount on the new ones. When the old jeans come in, they are checked, tested, cleaned, and they're sold to somebody else as pre-owned. This is what the other e-commerce brands are doing globally. Now, when they're sold to somebody else, first of all, the customer is retained because they're upgrading to a new jeans. They're getting a discount. A customer who cannot afford their jeans is getting a jeans at a cheaper price, so they feel the product, they use it, and they're happy with it. And they're also at the same time saving 7,000 liters of water. So it's a win-win for everyone. This is just one example. At the same time, there are a lot of brands which have excess inventory. Now, they have a network where they are selling those inventories to their distribution model, their e-commerce models. They do not want to spoil those models. They do not want to spoil their market. They don't want to spoil their distributors. So this is where we come in. We take that product, we grade it, we test it, we give it to our partners, we sell it to them. Through them, it goes to the end customers, and we make sure the quality and the condition of the product is stated when it's sold. And we also make sure that when it goes to a customer, if the brand says there's no warranty in the product, we make sure we take out the serial numbers, we put on the stickers saying that there's no warranty on the product. So that way, the brands are very happy. We are not spoiling their market. The customers are very happy. They know what they are buying. Our partners are happy. They're getting the best prices, and we are happy we're value adding to the whole universe and the ecosystem of that. At the end, next slide, please. So we actually dare to stand out and not blend in, which means that we tried and we learned over the years. We learned what not to do. We learned what is right, what is that is in demand, because this is a totally new category, totally a new business in the country. Globally, people are experienced globally, but then in India, learning from scratch when nobody was there, learning from our good deeds and even the bad ones, and making sure that the company has been profitable and afloat is something that we actually dared to stand out, and we did not actually fall down, and we are very sure, and we were very sure about this business and the future of this business. And we can see globally it's doing very, very well. Next slide, please. So who are we? We pioneered the concept of excess inventory and certified refurbished in India. Started in 2002. We were named in 2023 Circular Economy Limited, Rocking Deal Circular Economy Limited. Headquartered in Faridabad, 20 highly skilled professionals. Even the first employee we hired is still working with us. That's an achievement. The kind of experience we hold is the maximum in the country. Exclusive sourcing partners and agreements. Part of the Rocking Deals group, it's the largest, fastest growing integrated D2C e-commerce player as well. The trusted B2B sourcing partner, indigenous processes and technology for determining the quality, authenticity and grading and pricing. Trust that we've built up over the years. First generation entrepreneur. We've sold more than 10 million units, 18 plus categories we deal in. Exclusive agreements with many brands like Shopglue, Snapdeal, and many more. And we've also ventured into the e-waste. We bought over a company which is an e-waste company. We got 51% stake under this company as well. Next slide, please. So this is a journey. This is the road that we had, the whole journey. How we started 2005 with a retail Tata Indicom store, did the distribution business, gradually got into different categories, and learned about the seconds, refurbished, repaired products, and now we are what we are. 2023, we are very experienced. We understand what's doing what categories to invest in, where is the profit, how we can stay afloat, how the whole team will work, how all our investors are going to be profitable at the end of the day. Next slide, please. So about me, I am the first generation entrepreneur. Did my schooling from Modern Barakhamba, New Delhi, went to the UK, did my double degree, Business Information Systems and Management. Then I went to the US, but then did not pursue my master's, came back, started from scratch. I come from a service class background. I have made this from scratch, and this is where we are. Gaurav is the Chief Financial Officer. If you would like to add something, please.
So I'm CA by profession, worked with a lot of big companies like Ramkeys, has expertise in process restructuring, and then moved to the SMEs. Now working with the Rocking Deals from last 2 years, and working very closely with the sir on strategic as well as financial things.
Next slide, please. Next slide, please. So these are some brands that we are dealing in. Top 5 brands give us about 75 to 80% of our total sourcing of the company. Now, Rocking Deals Retail is an exclusive partner company for Rocking Deals Circular Economy, giving it high visibility and revenues, consumer demand. Expect to add more multiple exclusive sourcing partners in the future. Next slide, please. These are the categories we deal in: small home appliances, speakers, furniture, lighting, luggage, household items, non-electric, apparel, sports goods, personal care appliances, beauty and healthcare, toys, footwear, mobile accessories, large appliances, a little bit of mobile phones, desktops and laptops, watches and smartwatches, books and groceries. Next slide, please. So these are the places that we are in right now. We've seen Haryana doing very well. After the IPO, we wish to expand in East India. We're getting a lot of traction there. A lot of vendors, customers are, they're asking for our products, for our brands. They're very, very excited about it. Anywhere in any place where the penetration of these brands is not there, there's a lot of high demand. They want to feel the product, they want to see the product, and when they get discounts on it, they're very, very happy about it, and we have queues of people standing outside just to buy our products. And after East India, then we'll go to West India. We are wishing to open one on the outskirts of Mumbai, and that's where what is our thought process in the coming time. Next slide, please.
On numbers side, we did around 10.5 CR of top line in FY21 with the break-even operations. Then 22 we achieved a 50% growth and did a 15 crore top line with a slight profit. 23 we focused on profitability more. We consolidated the categories we want to deal in, the brands we want to deal in. We achieved a turnover of 15 crore with a PAT of 1.45. And in the current year now we are ready to scale up both top line as well as bottom line. In quarter 1 we did around 9.58 crore top line with 1.24 crore bottom line. And our margins, gross margins are in the range of 25 to 30% and PAT is in the range of 10%. Next slide please. This is our revenue breakup year on year between our lines. Our majority of the revenue historically was coming from our group company Rocking Deals, which is a B2C company. Over the years we are increasing our database, penetrating into the new categories and reducing our dependence on the group companies, and the share of other partners is also increasing, which we can see how it is increasing over the years 21 to 22, then 22 to 23 and in the quarter 1. Next slide please. Next slide.
The growth modes are well in place. We have ample room. We have all set up. We are ready to rock. We have everything set up. In the past, we've worked very hard to be where we are right now. Now it's time to expand. Now it's the time to go multiples and to rock it, like our name is. So what do we have? We have ample room to grow. We have about 30,000 square feet of warehousing space in Faridabad. We have somewhere close to 1 million units of grading capacity of products. Extensive distribution network in tier 1, 2, 3 cities and even remote areas. We have deep connects with brands, firm sourcing agreements with them. Widest range of competitively priced products from partial full warranty. Deep discounts and matched by any manufacturer or distributor. Unique talent pool. Well-rounded team of professionals, hands-on experience delivering niche industry. The average age of the professional that we have is about 45 years. Demonstrating experience in successfully partnering with global and national players. One thing I would like to add here, if the first employee that we hired is still working for us, this is a big achievement for us. We've had a lot of firsts for a lot of brands, for a lot of categories that we've done first agreements with. As of right now, the kind of experience we hold, because we started this for this category a decade ago, anything and everybody is there since then. And the kind of experience that we hold is maybe 10 times of what the whole industry in India right now holds in terms of man hours, in terms of experience that we hold. So this is one of the biggest points that we have, and the reputation that we hold, both with the brands and with the customers, which we've built over the years, because this category is all about reputation. This category is all about people trusting you, because there's so many people doing hanky-panky in this, getting fakes or whatever. This is what we built over the years. Next slide, please. So, RDC has exclusive supply to serve around 70,000 square feet of retail space of RD and its franchise network. This is expected to grow to 2 lakh square feet by 25. RDC is in process to set up a 20 plus people call center. We already have it in place, should be operational in the next 7 days. RDC has sold more than 1 lakh units in FY 22-23 and around 60,000 units in FY 23-24. Expects to sell around 5 lakh units by the end of the year. Selling price is somewhere close to about 1,500 rupees. We are going to kickstart our the e-waste operations, which I spoke to you about before. We've already bought a company out. We have the maximum stake in that company, and we wish to start the e-commerce operations in 24. And we see a lot of traction from there, because that's the whole loop between the whole circular economy strategy that we have. Next slide, please. So continuous focus is there on exclusive sourcing of agreements and marquee brands. The funds that we're going to raise is going to be majorly for tie-ups. We're going to foray into B2B online. E-commerce operations through platforms like Amazon, ShopClose, and Snappy is going to scale up our business. Rocking Deal's retail aggressive growth plans to be supported by exclusive suppliers. We are doubling our footprints. We have a lot of tie-ups in place. Technology spends for the CRM system that we spoke about before, L2, L4 capability of quality, enhancement of quality, and integrated e-waste ops that we are talking about for efficient and diversified sourcing. Next slide, please. We're embarking on a fundraising initiative. Next slide, please.
We are raising money mainly for the working capital. Out of the total raise, around 14 crore is for working capital. Around 1.5 crore is for brand positioning and marketing. Rest for general corporate purpose. Next slide, please. These are the issue details. 15 lakh equity shares, price band of 136 to 140. On a upper side, it's a 21 crore raise. 22nd issue is opening. Yeah. Next slide, please.
Next slide, please. All right, so let's talk about this. Let's do the SWOT analysis. Strengths. Only professionally managed company in the country. Certified refurbished products, extensive distribution network, limited warranty, in-house L4 service center, strong brand image and customer recall, which we built over the years. Huge opportunity of global e-commerce market with growing awareness towards sustainable shopping. Globally scalable, we can scale this anywhere in the world. Customer aspirational and brand awareness, particularly in Tier 2 and Tier 3 towns. Large unorganized market. Assist in carbon footprint reduction, brands that accumulates carbon credits. That were the opportunities. Threats, competition from unorganized players, and problem with counterfeit products. Weakness, quality of branded products remains the major concern in customers' mind. So just the mindset is something that we need to change to the customer, and that the weakness is not going to be there, which is going to be the task for the next couple of years for us when we grow. I think it's going to be more of a easy task for us. Next slide, please. Thank you so much, everyone. It was a pleasure speaking with you all. Please, you can take it from here.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the Q&A tab on the panel and click on Raise Hand button. The operator will announce your name when it is your turn to ask a question. Please accept the prompt on your screen and unmute your microphone while proceeding with your question. You may also post your text questions on the text tab available on the Q&A screen. We will wait for a moment while the question queue assembles. We have a question from CA Varun Agarwal, an individual investor. Please go ahead.
Hi, thanks for the opportunity. Great presentation, Amanji. I just want to know, how do you manage the unsold inventory which you also may have?
Thank you, Mr. Agarwal, for being here, first of all. Okay, so there is something called a garden sale that we organize. That's once in maybe 3 months to about 6 months, where anything and everything, not only non-selling, even there are products which are D-grade, where maybe there might be a product which would not, let me give you an example. A mixie which should have 3 jars, it only has 1 jar. Now, those products also have to be sold, right? We can't sell it through the partners or whatever. So we organize something called as a garden sale. Just one SMS blast, and we get something close to about 25,000 people who come and buy everything, anything and everything that we have there. So that solves all of our problems in terms of the excess or the problematic products that we're not able to move. We just do deep discounts and everything flies out. There are videos on YouTube. You could take a look at that. It's a beautiful experience where people are lining up outside for hours to get in, and 20 to 25,000 people just jump into the whole property and just pick up everything that they can lay their hands on.
Okay, how much are your online versus offline sales?
Today we are mostly offline. Around 95% of our sales is offline sales.
Okay. And you've been into this industry for almost more than a decade now. So your major growth has come in the last 2-3 years, I believe. So prior to that, what was the hurdle in growth?
So we had our, 2015-16, like I said, we clocked about 103 crore turnover. At that time, so we have learned, we've evolved over the years, because this is a total virgin market, and it was earlier as well. How we did 103 crore turnover was our dependability on online was 100%, and our dependability on mobile phone was 100%.
Okay.
And as of right now, we understood that we cannot be dependent on one category and we cannot be dependent on one way to sell. So we try to diversify. So that's the reason why our profitability, has been the same, or it's gone up or a little down, but always been profitable. And we've learned over the years that we need to focus more on profitability, more on the business than just doing top lines. So that's what we've learned over the years. And here we are right now sitting, doing and understanding what not to do and making this a workable business model.
Mr. Agarwal, does that answer your question? Mr. Varun Agarwal?
You hear me?
Yes, we can.
Yes, now we can. Are you
So,
through with your question? Yeah, please go ahead.
What is the marketing cost or the customer acquisition cost, and what do we do to get more customers?
Since it's a B2B, we have our dedicated customer care center. They do cold calling and generate the leads for us, and also we have our old partners and databases with us, which we monetize to, kind of a share that deals with them, generate the leads, nurture and transfer them to the sales.
So when we get the product, we already have orders. We already have people who are willing to buy because our pricing and the brands that we are dealing in, they're already hotcakes. So it really. But the penetration is through cold calling and references that we get through the experience that we've been holding for over the years. We do not actually do any other way of promotions or branding apart from that.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, please restrict your questions to 2 at a time. You may join back the queue for follow-up questions. We'll take our next question from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello, sir. Good evening. In your presentation, yes. Hi. In your presentation, you mentioned that this year you expect to sell 5 lakh units, right? So firstly, what makes you give that kind of a forecast? So what helps with that kind of an estimate? And you said your average selling price is 1500. So is that been derived so far, or is that an assumption? That is my first question.
It's an average that we've been seeing over some time. And when we say 5 lakh odd units, because we already have some brand types. Let's say with Bajaj Electronics, we already have about 1.5 to 2.5 lakh odd units which are there that we have to pick up all, which are in the pipeline. At the same time, when we talk about different brands like Zara and all, they also have somewhere close to about 30, 40 odd thousand odd units that we need to pick up in the next quarter. So that way we've derived somewhere close to 5 odd lakhs. It may be higher, but it's just a tentative number that we've given you for both.
Okay. So, given you've been in this business for quite a while, but still your base seems to be small, right? At 15 crores revenue, and you said like the economy is very huge, the market is very huge, and you're going to bridge the gap between the buyer and the seller. So now, what kind of a scale can you reach over the next 3 years? If you can give us an estimate.
So Mr. Shah, the scale and the top line was never of a concern for us. We never thought of running after top lines. We were always concerned about the bottom lines. Point one. Point two, the scale that we see now in the next 3 years is going to be what we foresee is somewhere close to the third year from now is going to be somewhere close to about 200 odd crores of turnover with a 10% PAT. Is that what we have that we are very sure about?
Okay, those are your targets for the next 3 years. Got it.
Yes.
Okay, I'll get back in queue. Thank you for answering those. All the best.
Pleasure, Mr. Shah. Thank you.
Thank you. We have few text questions. We have a question from Vikas George from CalPond. Hi, even after many years of operation, we are only clocking top line of 15 crore in FY23. What is the reason for such tepid growth? Do you think India is still not ready for your business model? I also heard you claiming 10 times growth in next couple of years. What gives you confidence for this growth?
Okay. So, as this has been a very virgin market, it's that we have done the business. We've done more business than maybe 10 times more than what we've been doing. The depreciation that we had, the profitability never went down. Like I said, for us, top line has never been that's never something that we've always run after. Bottom line is something that we've been maintaining from day one. We've been making profits in this company, and in every company. We only work on profits, number one. Number two, getting top lines is not a difficult task. Getting the right brands onboarded and getting the right tie-ups and association is something that is very, very important. This is what we've achieved, and that's why we are very, very confident for the coming future that we will have 10x, 20x, 30x, depending on the growth of the country and demand of the customers. We see amazing growth in the coming time.
Thank you. The next question is from Rajesh Swaminathan from Gorilla. Hi, I wanted to know the rationale of starting grocery as margins are quite low here, and some color on cash conversion cycle, please.
Okay, so grocery, when we were not a grocery store. We were doing grocery which was in deep discounts. When we say excess inventory, we talk about, let's say, Coca-Cola bottles, which are going to expire in the next 2 months or 3 months. And if we are able to get it at 80% off, and there's a party that a person is doing or a customer is doing, and he gets 50% off of Coca-Cola where he doesn't get a 1 rupee discount also, it's on a high demand. There are people who just need to use it the same day. The same way for other categories, subcategories of grocery, like, the regulars like atta and chawal and all of that. That was the reason we got into it, because we were getting a lot of deals there, which were close to expiry, and the demand from the customer was phenomenal. So it did very well for us. And the margins there are also amazing. The margins are not less. But yes, the whole bridge between the brand, the product versus what a customer needs is something that we were trying to build up, and we have been building up. And it's done very well for us, grocery till date. Your next point was?
Cash conversion cycle. Historically, it's around 120 days for us. We are working to optimize it. In quarter one, it was around 100 days for us.
Thank you. We'll take the next text question from Piyush Purohit from Breakout Hunt LLP. Why such extraordinary spike in revenues? Any particular trigger behind that? Also, need some idea on competition and peers.
So the reason behind our revenue was stagnant actually in last 2 years, 15 CR to 15 CR. But the reason for the jump in profitability is we were experimenting around the categories. In last year, we kind of freezed and finalized what categories we want to do, what brands we want to do, where the margins are, where the demand is good. And we have optimized our sales mix in the last year, which supported the bottom line for the company. And so on.
Competition, there's no such brand nice enough and has experience like us. There are some mop and pop shops in smaller towns somewhere that they're trying to sell and they're trying to supply. But authenticity, experience, customer, there's no such brand which has actually worked on brand building, which has worked on hiring professionals, which is built on having brand tie-ups and brand connectivity, making sure that it's a long-lasting relationship with all the different various brands.
Thank you. Ladies and gentlemen, a reminder to ask a question, please click on the Q&A tab on the panel and click on Raise Hand button. We'll take the next text question from Yash Doshi from Equentis Wealth. Could you elaborate more on the sudden expansion of operating margins in FY23?
We have optimized the sales mix. We have in FY23 we kind of freeze the categories and the brands we want to do, where the margins are, where the demand is, which has helped us to expand the operating margin and PAT margins.
The next question is from Akash Zaveri from Perpetual Investment Advisors. Hi, thank you for the opportunity. What would be your top brands that you sell?
Bajaj Electronics, Boat, Whirlpool, we do Zara, Puma. We have brand tabs with Flipkart for all their customer returns, and many, many more brands like that. Acer. So there's a list of 30 odd brands. It all depends what is at the right price and what's their supply in terms of the month and the year that they have.
Thank you. We have a question from Disha Shah, an individual investor. How do you price the final product? Could you please explain the steps taken to arrive at this?
Thank you, Disha. Very good question. Actually, that's the most. That's what we actually do, and that's what our whole business model is about. When we buy products, let's say, let me give you an example of Bajaj Electronics. When we buy their products, we might be getting somewhere close to, let's say, 100,000 odd units at a time, or in a quarter, something like that. So let's say we got 100,000 odd units of their products. There'll be about 10-15,000 odd units which are going to be totally like new, which means that the boxes are totally intact, the product is totally sealed because it's excess inventory or something which is not damaged or nothing. There's no problem. It totally looks like new. So those products are graded as A. Now those A graded products were going to be sold, let's say if the MRP is 100, they'll be sold for about 60 odd rupees or 65 rupees. Now at the same time there'll be a B grade product in the same lot of 100,000 odd units. B is something where the box is a little damaged, but the product is okay, intact. Those are going to be sold somewhere close to about 50% to about 45% realization, which is somewhere, let's say we are selling it for 45 rupees out of the 100 rupees of MRP. And the same way then we'll have C grade, which is going to be, the product might have scratches or the box is going to be badly damaged. Now, those are going to be sold as C grade, and they're going to be sold for somewhere close to about 65 to 70% discount, which means out of the 100 rupee MRP, it'll be sold for 30 rupees. And we cover the warranties ourselves, so there's no difference between a brand new warranty or after sales to our after sales or our quality of the product. So I hope this suffices your query.
Thank you. The next text question is from Hina Vora from DAM Capital Advisors. Could you please repeat your revenue and margin guidance for the next 3 years?
For next 3 years, we are expecting we should be growing at somewhere around 3x to 5x on the base of FY23. And margins should continue to stay in 10% kind of range.
Thank you. The next question is from Shraddha Lad, an individual investor. How do we identify the brands that RDCEL would like to associate with, and what is a sourcing strategy?
Great question again. So we are focusing on a few new categories that we would like to do, and we would like to expand, buy more in those categories. Categories like apparel, shoes of top brands is something that we're going to do. Even though they have factory outlets, but they still have products which are after the factory outlets don't know what to do. And they do not want to give heavy discounts to those products through them. So those products come in and we see a lot of margins there. We are getting into furniture in a bigger way because furniture is something that people really duly want, the right category, and there are a lot of excess inventory in that category. Household, we've seen a lot of traction there. There's a lot of household products which are not doing very well. They've been manufactured, but maybe the retail space isn't good enough. But if we're able to buy that at lower prices or prices which are below manufacturing costs in lots, we're going to make good money and it's going to fly for sure. It is flying as well. So there are many new categories that we're working on, and we see good traction in those different categories. There are many more apart from these, but I give you a few examples.
Thank you. The next question is from Vineet Loiwal from VL and Sons. Your current B2B is offline. How do you tap partners and what is the marketing strategy? How many partners do you have today and what is the expected growth in market penetration?
So in our line of business, tech does play a role. But in B2B, I would say in our line of business, there has to be more hand-holding. Because there's more category that has to be spoken about, more description about the product has to be given. So over the years, we feel that right now manual intervention is very important. But maybe a couple of years down the line, even though our website should be up and ready in the next one month for B2B sales, we still see that the manual intervention is very, very important in this category because you have to talk about the whole grade of the product, how it is, specific pictures and everything has to be shared. To make life easier, we're going to get a website where we're going to showcase everything, all the pictures and everything is going to be there with the pricing. And if you pick up this many quantities, it's going to be this price. The whole quantity-wise pricing is going to be there. The growth that we see is, as of right now, there are limited people buying excess inventory or certified refurbished globally or in India as well. To tell them, to show them in the inventory, we invite them, we showcase them the products that we have, and then gradually with word of mouth, 1 order, 2 orders, 3 orders, then the whole repetitive cycle starts. We have more than 1,000 odd vendors who've bought from us over the years, and it's only growing.
Thank you. The next question is from Deepak Shah, an individual. Is New Jesa your competitor and your customer too? Can you please throw some light? How do you decide the buying price from your partners?
Great question. We are very New Jesa is not a competition. They're only dealing in laptops and they're only dealing on the e-com platform. We are very different from that. We're majorly offline and we're doing many different categories. We're not dependent on one. We have done some business with them in the past, and certainly if there are great deals, we will do in the future as well. Anything that I'm missing?
Thank you. The next question is from Yash Doshi from Equentis Wealth. Which are those categories, brands or products which helped you to expand margins? Which categories or brands we are focusing in FY24? Do we expect this 15% EBITDA margins to sustain in FY24?
Yes. Fashion and small home appliances are the categories where the margins are better and we are focusing on. And yes, going forward in FY24 also we are focusing on bringing more and more brands within these categories, like Zara is one of the recent additions in that. And these margins we expect to sustain as we scale as well.
Thank you. The next question is from Akash Zaveri from Perpetual Investment Advisors. Where and what channels do our partners use to sell to the end consumers?
They are mostly B2C. They do. They buy the inventory from us. Our partners, they will have tier 2, tier 3, 2000, 5000 SFT retail presence where they sell this inventory ultimately.
The next question is from Rahil Shah from Crown Capital. Are EBITDA margins sustainable at this level? The room for improvement? Also, you said you will touch 200 crore top line in next 3 years, but CFO said you expect to grow 3 or 5 times over FY23 base. Please clear the confusion.
Yes, these EBITDA margins will be sustaining, and we will be able to. There are few improvements opportunities here and there which we are working, but on a broader terms they will stay in this range as we scale. And what we expect, what the number I gave is on a most likely or a conservative side. Okay, 3x to 5x is kind of a growth we should be able to do.
Even if we do it for 3 years, what is going to be the number?
So if we say, for 3 years, let's say, like in this year we are looking to grow 3x to 4x on a last year's number, and then CAGR basis 35% we will keep on doing on a conservative side.
It turns out to be 160, 70 anyway. So yeah, so it turns out to be 170, 180 crores anyway, so somewhere close to about 200, yeah.
Thank you. The next question is from Piyush Purohit from Breakout Hunt LLP. Is it true that we can't open our Zara store in 50 kilometers radius vicinity of Zara stores? And how do we deal with our dead stock, especially in electronics?
It is totally true. We cannot open a Zara store in the vicinity of 50 kilometers. And when you spoke about 40 kilometers actually, and when you spoke about dead inventory that we have, we generally don't have any dead inventory because the prices are very good. But then if there is something which is not moving at all, we do something called as a garden sale, for which there are videos online you can see. We've been doing this for many years now, where with one SMS blast or one SMS blast to our to the base that we have, we get somewhere close to 20,000-25,000 odd people who come in and buy and pick up whatever is there at the prices that we put in. So that day clears off all the pending excess or dead inventory that we have, and we were able to generate a lot of business, and the customers are very happy with those deals. It's all on social media, YouTube, everywhere.
Thank you. I would now like to hand the conference over to Mr. Amanpreet, founder and CEO, for closing comments. Over to you.
Thank you so much, everyone, for being here. Over the years, we've learned a lot. We're actually now at the time that we really feel this is the time to multiply and make this concept many folds. We've been very conservative in whatever we've been saying. And we have seen ups, we've seen turnovers up to top lines of hundreds of crores to 15 crores as well. But we've only focused on one thing, that we have to do the right business and make sure there are profits in the business. And this is what our DNA is, and we will make sure that we stick by it. We make this we make sure that we do better than the countries, better than the brands which are there globally. Because India, Bharat is something where maximum growth in the coming time is there. So we see this concept, or we see this business many folds. And thank you so much for being here, and wonderful questions. Thank you so much, and we're always here for you.
Thank you. Ladies and gentlemen, on behalf of Rocking Deal Circular Economy Limited, that concludes today's session. Thank you for your participation. You may now click on the exit meeting to disconnect.